Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Tuesday, May 19th, and this is your end of day recap. So first things first, everything that we're going through is for information purposes only, not giving any recommendations or advice out or anything like that. One quick announcement is that we are doing a member webinar today at 5:30 in an hour. And that, of course, will be recorded. If you're not a member of Tribeca Trade Group, simply just go to my Twitter handle and you could click on to be a member. Listen, right now, we're really not charging much to be members. It's $129 a month. That's it. That's all I charge. That's going to change on the first of the month. We're going to move that rate up higher. But if you sign up now, you're basically grandfathered in. So that's the main thing, and the information that we put out daily is just in the trading room is fractional to what I put on Twitter. So again, we're going to go over what's known as the Market Webs indicator. So if you see me post this on Twitter, or if you're new in the trading room and you're not exactly sure what we're doing with it and how we're using it to trade every day. Really, in a nutshell, it gives me a roadmap. It really shows some really good resistance, support levels, a lot of pivot levels, virgin point of controls, where I know that, number one, it's great to kind of map out your trades to show you support and like where my stop price should lie. Every time I get into a trade, I'm defining that, as well as like where I want to take targets. It also helps me avoid a lot of trades. We're watching option flow and we're watching the tape all day long, but you need a filter. You know that you can't take every trade that hits the tape, right? And so if I see something and even though it's an aggressive call that's on the tape, and I know that there's resistance right ahead of it, it kind of eliminates that trade. And that's basically what I want to be doing a lot of times, is I only want to be taking the very best setups. I don't want to be over trading. So anyway, that's the Market Webs, and we'll be doing that in an hour. Sign up if you're not a member. So today's price action, theme of the day, sentiment running hot. So there was, of course, this news story out by Stat News about Moderna, the study that came out yesterday, which lifted a whole bunch of the have-not groups. So they contradicted that, and the market, gave back some of those returns. Now, it's good to observe how this is unfolding, right? You talk about because this can help with your positioning, right? The closer that we are towards a vaccine or a positive treatment for the coronavirus, the more things like the travel and the leisure and the bank stocks and industrials and so on and so forth, those will rally. If we're farther away, then we're probably going to see names that do well in almost any environment, right? A lot of the growth stocks, and also in addition, the stay-at-home stocks are going to do well when we don't have or when we're further away from a vaccine. So it's going to be this constant push and pull. I think for the next couple months, as well as the country is starting to reopen in different states, not open completely or not open yet in New York City. Hopefully that will happen soon. Looking forward to that. But I think you kind of just want to be have that in the back of your mind. So, so why is the theme of the day sentiment running hot rather than this story on Moderna? Because I think when the sentiment is running this hot, and I'll explain where I'm getting that from. If you don't think sentiment is running hot, I'll walk you through a couple things that I'm looking at. But the way to kind of look at this, when sentiment is either extreme hot, right, or when sentiment is very low. That means, so let's say when the situation that we got months and months ago was when the sentiment, and we could look at the this particular model, which is one of my favorite sentiment models because I think it works. But the market sentiment model by the Citigroup, the panic euphoria model, when this is flashing all the way down here, that means probably any positive news is going to cause the market to go up. That's how I kind of look at sentiment, right? What is priced into the market? Well, a whole hell of a lot of bad news was priced into the market. So anytime you get good news, because the sentiment is so low, you're going to get a bounce. Now, on the other side of this, when euphoria is hot, when sentiment, sorry, not euphoria, when sentiment is really hot, any Bad news is going to bring the market down. Good news, more and more good news, is it's going to get harder for the market to go higher. Right, that's what we mean when we talk about market sentiment. So this thing is flashing right now, and I view and I think this model is much better than like the fear and greed index that everybody likes to quote. I just think it's more reliable. If you look at the times where this thing has gotten into euphoria, like in the beginning of the year, it eventually was telling. It was also really good when it was panic. And if you look further back, it's been very good. Now the timing isn't always perfect with it, but it's been pretty good. Yeah, and by the way, so these are some of the things that we do during the for the macro weekend call that kind of gets you ready for the week. We talk a lot about some of these things that are on the tape. So flash forward to what we saw yesterday. Now another gauge of sentiment is the put call ratio. Look at where this thing got to yesterday. The equity put call ratio was a 0.47, meaning there were not a lot of puts being bought. Traders are getting complacent. Look at this article that came out today too. Volatility traders abandon the VIX bets as stock conviction. Uh, as That doesn't make sense. Volatility traders abandon VIX bets as stock conviction vanishes, or maybe just their conviction vanishes. I think that would make more sense. But regardless, I kind of understand what they're saying here. They're kind of throwing in people who are been long volatility are throwing in the towel a little bit. Again, that's a gauge of sentiment. When that happens, typically, again, it doesn't mean that there's going to be a market reversal. It just means like if there's any bad news, there's going to be an impact usually. All right, so that's how I interpret that. Besides that, there was a lot of good setups today for most of the day, and also, so this is like I know like this is a market recap, and I try to give you things that went up and things went down, but really I try to provide a little bit of context in return and regarding to how to manage trading on a day-to-day basis, and basically how to like take advantage of something like this. So number one, all along, I think this market, right, even if you're mostly playing on the long side, like me, except to hedge every once in a while, as long as you're not super greedy, you can make money on a day like this. And in the past couple months, you just have to be mindful of not being super greedy. And that happens a lot in trading, right? Everybody wants more. Everybody always wants more in trading. They want to make a ton of money. When people first start to trade, they think, "Oh, I'm gonna crush it as a trader." It's a lot of learning that has to take place, and the more that you can kind of control your emotions and control your greed, because there were some beautiful trades today. There's a lot of option activity. I didn't take any Facebook today. Again, I'm always upfront with you guys, but I didn't take any Facebook. But it gave you a really nice trade for the day. Now, if you were looking for an absolute grand slam, then you may have been disappointed. But if you were looking for like a double, triple, in terms of how much money you made for this one. Same thing with Service Now, which I played today, and this worked out really well. But we started to see puts come up at the end of the day. So, I bailed. I even rolled my profits in this one, and then I just took down the trade at the end of the day because I saw puts going up and I didn't like how the tape looked. So again, if you're doing that, you're managing yourself a little bit and saying, "Hey, I'm not going to turn a winner into a loser." So this is yesterday. Let's go to today's trades. Today's trades. All right. So Amazon, I put on a call spread yesterday. Made some money in that today. That actually that's the wrong expiration. It's the 29th. I actually made a boo-boo on that, a typo on that. I won in the 22nd, but I'm in the Amazon 29th. Applied Materials, great looking setup. So here's the thing. Yesterday's video I talked about that. I was like, hey, maybe we're seeing a changing of the guards in terms of maybe value is going to take over a little bit. I talked a little bit about IWM outperforming, and I kind of left it at that at the end of the video. I didn't put on any IWM. The small cap ETF, IWM is in Mary. But what I did after hours is I looked at charts and I said, okay, well, what are the setups showing me? And I liked some of the setups that I'm seeing in the semiconductors, for example. So this trade worked out really well. It was up 4% today. So again, as long as you're taking targets, in trades, you don't have to. Well, you always have to worry about a headline that's going to catch it. But I took, excuse me, I took a target here, 460. So again, I have the last piece on of this trade. But you got to, have to make sure that especially if you're trading options, because options are so volatile. Again, it's an exercise in risk management. It's an exercise in terms of, patience, getting those targets. But it's also in greed. Try not to be super greedy, so you've got too much, too much on the line. Now, same thing with this one, with ServiceNow. All right, I took this off. I kind of legged into it a little bit. Took this off for 1950, paid 1750. I did roll this, and then I dumped it. All right, I added to this, and I started to see the market turn a little bit too much, and I dumped this at. Sorry, that's this one. Rolled. So I did take a little bit of a loss on the roll, but that's fine. So yeah, it's important. Also, one of the other things that we were going through in the room was when you see a headline like we saw regarding this Moderna, and you have to understand that the positive that we saw on the study yesterday lifted the whole market. So if there's a negative on the stock in regard to the vaccine, it's going to bring the whole stock market down like it brought it up yesterday. So in my trading system, what I was trying to tell everybody at the end of the day was make sure that you have, that you could buy puts on the SPY or whatever instrument you like to use. I just buy SPY puts, or if you're trading futures, you could short the S&P really quickly when you see a headline that you think is going to affect the market, and you want to be able to get in quickly. Just a couple clicks. So you want to have a set like default contract in your trading system. You don't want to be like clicking 6 or 7 times to get into a trade, because you're going to miss it half the time, especially if it's or if there's a buyout rumor in a name. You want to be able to get into the market as quick as possible, and you want to have some of these things. You want to have the thought process. I used to call this being golf ready, right? If you've ever played, I like to always use sports analogies, but if you've played golf before, you know that, at least if you've played a lot of golf, you know that when you're waiting for someone to hit the ball, right, in the tee box, what do you do while you're waiting for someone? Well, you kind of get ready, right? You get your club out of the golf cart, you get the tee out, put it in your hand, you have the ball ready, right? You don't, when it's your turn, you don't fumble around and go get your club and do all this, right? You're ready to go. You go right up to the tee and you hit the ball. You maybe do one practice swing. So it's the same thing in trading. Right? You want to think about doing as many less steps. You want to be readiest to react. So I was going over with that because this was something that I did right when there was news on the tape. Was I just bought some SPY puts and weekly puts at $1.90, and then I was getting out of them. I actually put it in the wrong channel here. Whoops. Right, but I was taking these off for 250, and again, just basically minutes later. So it's an important concept to learn, to make sure that you've got your trading system set up, and you've got the right amount of contracts that you like to use, and you could basically get into the market in 1 or 2 clicks. All right, guys, so that's it. And again, I think that just in summary today, just a couple of the trades that we went over and some of the ones that I took. By the way, check out the, this again, I'm kind of just explaining this in case you're a new member or in case you are thinking about joining. But look at the setups that we provided in pre-market in the watch list. These did very well this morning. So again, I like to do the research. The one that I took, I also like this Autodesk, and I was already in CrowdStrike. But Autodesk ended up up 2.4%. But again, it's doing something different. Right? You could see this move above value. Right? It's the first time it's been in value all month, and there's a VPOC target up here at 206. So this might be one that I look at tomorrow, because I did not get into this one. CrowdStrike, which I continue to kind of position around, had a nice day today, up 3%. So all in all, really nice trading day today. All right, guys, that is it, and I'll see members about an hour at 5:30.